Banks underperforming the broader market this year. The KBW Banks Index down around 15% in 2020. The S&P up about 15%, though they've had a strong fourth quarter, the banks. Joining us now to talk about his outlook for the financials and his top picks is David Ellison of Hennessy Funds. David, great to have you join us, as always. And before we dive into your picks on the bank front, stocks clearly have been strong this year despite a weak economy. What do you make on that high level for next year?
Well, the market's done well because there's been a lot of stimulus. The Fed's provided money. The federal government's providing money. The economy's done remarkably well, given the disruption that we've had, really, and we all know what it is, and I don't want to repeat what everybody's been saying for 6 months about it. But, I think at the end of the day, there is tremendous wealth out there. Home prices are been up. Stocks are up, bonds are up. The only thing that's really hurting is the employment side, and that's being helped along by the government and some degree by the Fed. So when this thing is over, which may be 6 months to a year from now, I think the economy is just going to be booming. And that's what the market is kind of telling us.
So will that be a good environment for banks then?
Well, I was looking at your promo about the BKX being down 14%, and you say it's underperformed. I mean, that's a kind way of saying it's been completely awful. I don't remember a year this bad in terms of relative underperformance, especially if you own Tesla versus, let's say, a bank. So, I think generally the banks need a better yield curve, and we've been fighting that for a decade. And hopefully we'll start to get that. They need better loan growth, but they're not going to get loan growth until there's better yields. And I think we need a tremendous amount of M&A to rationalize all of the infiltration of the Fintech sector into this space. Your last guest was saying, well, if Facebook can't make money doing what they're doing, they'll just get their Libra thing passed and they'll start doing that. So the solution to Facebook is to get into the financial services business, which is perfect, right? So I've got to own Facebook in my fund now. But, it's like this industry is being attacked tremendously. And that's why, for example, I recommend PayPal because they're eating everybody's lunch. And you could say that about a bunch of other names. So you need consolidation. And I think that's what we've seen this year. And the small cap fund that I run, which is actually up for the year, I got lucky here a little bit, but has been aided by a number of significant accretive acquisitions, and I think we'll see a lot more of that.
What kind of targets? And PayPal's already doubled this year. You think there are more gains there?
Well, this is like owning Visa 10 years ago. It's like owning MasterCard 10 years ago or 20 years ago. We all know how that has performed. It hasn't, been up 600% in a year. But certainly, it's performed well. So, and you could say that, about Square or about any other of these sort of payment systems. You could put Apple in that category to some degree. You could put Google into that category to some degree, although they're much bigger companies. But that area is going to continue to grow. And I think it's going to be an area that the bigger banks, the traditional lenders, are going to have to fight to either get back or to find a way to enter because it's the wave of the future.
David, next year, your top picks, Wells Fargo on the list. So 2021's finally the year of turnaround and outperformance for them? Well,
I've got 3 picks. So Wells Fargo is basically... It's been poorly run for a number of years. They're finally getting it. They're working a lot harder than I am to fix the company. And that usually works in financial services. You want to have them working harder than you. And they're working very hard to fix this thing. And I think that the next 12 to 18 months, it's either going to get fixed or it's going to get bought. I've got PayPal. We've also mentioned PayPal. That one is, I think, is a metaphor for Fintech and what's happening in that space. I've owned it since the IPO and will continue to own it. My third pick there is Capital One, which is basically a mid-cap bank that needs to benefit from consolidation. And I think you're going to see a tremendous amount of that in the next 3 to 5 years. If you're a $5 billion bank, you just can't compete. There's just no way you have any rational reason to exist. You need to be 30, 40, 50, $100 billion to rationally survive in this market of, narrow spreads, the Fed controlling the pricing of all your assets, the regulatory structure. You need to get bigger. And I think that's an opportunity for, people who invest in financial services.
Shepard Smith here. Thanks for watching CNBC on YouTube.